Hey, scholars, we've got some learning to do in this area, and we're going to actually take a look at some items and determine whether or not they are required to be documented or not. But in order to do that, we should have a discussion, a little brief chat about some of the requirements of the work papers and the documentation. So let's spend a minute and just discuss that. We're now going to discuss audit documentation. First, I want to tell you a colleague's story when she was working at Deloitte CPAs. One day, this colleague was walking down the hall of Deloitte and saw a fellow employee looking pretty upset. Must have had a bad day, she thought. She walked further down the hall and saw another employee crying. She asked, "Is everything okay?" "Well, no," responded the employee. "My client was selected for inspection by the PCAOB. That's the Public Company Accounting Oversight Board. They audit the auditors. So now the auditor is going to get audited on what they did or didn't do." You'll learn when we get to Audit 6 that the PCAOB conducts annual inspections of CPA firms that audit publicly traded companies. All right, and if they provide reports of 100 or more, they do it annually. And they asked me about an audit procedure, which I definitely performed, but I didn't document it. Because I didn't document this requested procedure or required procedure, it will be written up by the PCAOB as a deficiency, even though I told them that I did it. In an audit, if information is not documented, it didn't occur. Audit documentation is very important. It supports the auditor's opinion. As you saw in Audit 1, the annual report can contain over 100 pages of financial and non-financial information provided by the client, and the standard audit report inserted is typically just one page. Just one page. To support that one page, though, the auditor have hundreds of pages of work paper that provide evidence. Generally accepted auditing standards require the work papers include certain elements. So let's take a look at some of the items that we could have. As you can see, there are both electronic work papers, i.e. bank reconciliations, as well as manually placed hard copy items, such as bank confirmations, that make up the audit file for year 2. It is common for auditors to request soft copies of reconciliations and roll forward so that the auditor can easily tick mark these items. You'll see audit programs throughout the work papers. Audit programs are often created by top firm leadership or are part of a purchased audit software package. Sometimes the audit program is generated based on what is checked in the audit strategy and audit plan. For example, if an auditor learns that the client engages in derivatives and checks that box in the planning program, then a derivative program with the related audit procedures will be generated for the investment cycle. The audit program details the actual procedures that should be performed by the auditor. Typically, the auditor first reviews the audit program, then performs the applicable procedures. The auditor will then sign off that procedure where performed and reference the applicable work paper. You'll learn all about the typical procedures performed in various cycles. We're going to learn about that in Audit 4. Here is an excerpt from the cash audit program. Now, our purpose isn't to actually learn the steps, but just to give you a feel. You can see the audit program for cash. Audit objectives: the cash balance at the end of the year for reporting represents the cash and cash items on hand, that cash transactions have been properly recorded, and the cash balances are properly described and disclosed. What's the analytical procedures? We're going to investigate any unexplained or unusual relationships between current period, prior period, and budgeted amounts. So we're going to do some detailed tests. We're going to obtain confirmations of year-end fund balances of all accounts and that were open during the year. We're going to obtain and review period-end bank reconciliations from the bank directly on the bank accounts and perform the following: verify math accuracy of the reconciliation, agree the balance to the general ledger and bank statements, trace deposits and transit and outstanding checks to the bank cutoff statement, investigate checks outstanding for a long period of time, and investigate any unusual reconciling items. We'll also conduct a surprise cash count on cash on hand and other funds on hand under the custody of the cashier, which is form part of the cash items. We're going to test transfers between the entity's bank accounts. We're going to make inquiries of management whether cash balances are restricted as to the use or are proper and if applicable, determine whether appropriate disclosures have been made. And then a conclusion on the results shall be mentioned in the work papers. Remember, since we are in the cash section, let's go ahead and look at one of those electronic work papers. Now, in this case, you'll notice tick marks show it reconciles to the financial statements, shows the procedures performed, shows the results of procedures agreed to without exception, and shows who performed the work. It shows who reviewed the work and the date it was completed. You'll notice that one of the tick marks references the confirmation received from the bank. You'll learn in Audit 4 that bank confirmations are sent to every bank and that banks fill out the confirmations and send it back to the auditors. These confirmations would be placed in the folder. Let's take a look at that confirmation. See, it's right here. Now, we may want to reference that it also includes sign-offs and cross-references to numbers listed in the work papers. This hard copy, as well as other hard copies, represent the current audit file. As the auditor performs the audit, they put the hard copy work papers within here. The work papers in this current file relate to the year under audit. You'll see it also includes the engagement letter that we will cover in a subsequent module, as well as the management rep letter. Together, these electronic and hard copies make up year 2 audit work paper. As the auditor will typically bring 2 other folders with them. One, the prior year file, so that we know what to follow, and the permanent file of items that are consistently going to be used, like the articles of incorporation, etc. The prior year work file is often used for reference. The permanent file includes documentation that has continuing interest from year to year. For example, let's look at the permanent file here. So we can flip through the pages, but again, we're looking at maybe leases that appear here, bylaws, articles of incorporation. These are all items that would appear not only in the Creative CPA Clothing permanent file, but in others as well. Since Creative Clothing is a non-issuer, we need to complete the final assembly no later than 60 days following the report release date of February 15th, year 3. If Creative CPAs was an issuer, then you'd only have 45 days to get all the work done. One of the quality control procedures that will be used is to verify that all the items, both soft and hard copies, show who prepared it, who reviewed it. Also, CPA team will ensure that any hard copy referenced in the electronic audit file actually are in the current hard copy folders. Once these and other quality procedures are performed, the auditor will typically store these binders at the firm location in a document control center. These work papers need to be retained for at least 5 years, since this is a non-issuer. If it were an issuer, we would have to do it for 7 years. So a couple of things I would like to point out here. A couple of things I'd like to mention before we continue on is, first of all, I do a lot of CPE, continuing professional ed, for some of the top companies in the world. And every month or every quarter, I'm going out to them in the New York area, in the Detroit area, down in the Maryland, Washington area. I'm hitting up to Connecticut and Massachusetts working with them. And one of the things that I've often been asked to present to CPA firms, even the Big Four, are topics on work papers and documentation. And I always start that lecture by saying, today, I'm going to introduce you to your best friend or your worst enemy. You decide which one they are. Who am I introducing you to? Your work papers. Because if you're ever put up on the witness stand, your work papers can be your best friend to show that you complied with standards. Or they'll be your worst enemy because you didn't document that you complied with the standards. And now you have a huge liability case. So we've looked at that. And remember, the work papers, I always refer to it under the PCAOB standards, called the Experienced Auditor Standard, which means that an experienced auditor, not an inexperienced one, but an experienced auditor from that industry, but having no direct contact with that client. So you're experienced in the industry, no direct contact with that client, should be able to look at the work papers exclusively without talking to anybody and understand the nature, the extent, the timing of the work that was done, who did it, the conclusions that were reached, and who reviewed it. Those are the kind of standards that we want to have in our work papers. So now we're going to take a look at some of these questions and make an assessment about whether or not they are the items that we should or should not have in our work papers. So let's take a look at some of these items together. Let's start with the first one. Audit documentation should indicate that the accounting records agree or reconcile to the financials. Certainly that's recognized and recorded. That's required, right? Let's go to the second one. Audit documentation should include video recordings Would you be required to? You might want to, but are you required to? No, not required. How about audit documentation should include management's representation letter? I think that's an easy one. That's required, of course. The next one down here, audit documentation should include the audit plan. Absolutely. Let's put on that one. That's required. Our next item here is going to be audit documentation should include the original confirmation responses received from customers. Certainly that's required. The next item is audit documentation should include all drafts of work papers, including any notes that reflect preliminary thinking. I don't think so. Audit evidence should include duplicate copies of documents because no audit documentation should be discarded. No, I don't think so. Audit documentation should show who performed the work and who reviewed it. Absolutely. Audit documentation should be detailed enough that any reader of the financial statements could understand the procedures performed and the evidence. First of all, reading the financials, you could understand it? No, and it's not any reader. So that's not required. It's the experienced auditor could look at the audit work papers. Our next item, audit documentation should include copies of abstracts of significant contracts and agreements. Absolutely. How about at the completion of the audit work papers should be filed with the AICPA? No. You file them in your own system, so that's not required. And last but not least, audit documentation should include discussions with significant findings, discussions of significant findings or issues with management, and those charged with governance. Absolutely, you'd want those. So this is a great example of the things that you would include and the items that aren't included. Hopefully this helps you have a better understanding of this area, and we're going to get ready to do an exercise.